Hi, everyone. It's Monday, August 10th, 2026. I am excited to showcase to you today. This is a walkthrough of a brand new dashboard, which was just released. It's under the Models tab here at Fraud Research. It's called the ProShares Daily LETF Command Center. So this is the daily tracking of all ProShares products that are leveraged or inverse products, whether they be indexes, whether they could be commodities, or whether they be single stock. And if you followed my work, the claim is simple. I'm a whistleblower on these products. I consider them to be fraud. And one of the pieces of evidence I gave the SEC was that if they are fraud, it should make logical sense that the issuers of these products, actually, whether they're fraud or not, the issuers of these products must sell these on average for a higher price than they're later redeemed. If you sell something on average for $100 and they're later redeemed for $50, that $50 has to come from somewhere. And because these products generally hold, the performance mechanism is swaps, which are essentially IOUs between large Wall Street counterparties, and they don't hold equities and they don't hold options. Wall Street is is liable for any of the performance. So with that simple framework, it should make logical sense that on average, these products are sold to investors at a higher price than they're later redeemed. So what this dashboard will do will simply track that for all ProShares products for all periods of time going forward. The dashboard refreshes daily so you can see what happened yesterday and what the flows lead us to believe. So let's, without further ado, let's showcase the model here. So if you're new to me or new to my work, go to fraudresearch.com. And there's a lot of free material here. There are other dashboards I've released, which you can look at the YouTube channel. You can read this website to find out background on that information. If you'd like, there is also a book for $10, which goes over all my whistleblower complaints, the mathematics behind these products, and how to profit from them, the models that I have put on other dashboards or written papers about. In addition, there are my SSRN papers. Deception by Design contains Python code for those that want to validate my work from a mathematical standpoint and see how it performs over time. This was published in summer of 2025. So is Am I the Patsy? This is the flow issuance. What happens if we simply follow the flows of these products and trade along with Wall Street using the follow the leader model? And then Who's the Dog, Who's the Tail is a further look at some of the products that some people think might be beneficial. TQQQ, SQQ would be an example because they are up since issuance. But when you look at the data a little closer, you will find out that supposedly investors are choosing to buy at the highs and sell at the lows, which is not a non-economical choice for the investor, and really speaks to my claim that Wall Street is dictating the flows of these products, meaning that a fiduciary is purchasing these products on your behalf in your 401k plan, in your pension fund, in your endowment, sovereign wealth fund, and any other opaque entity in which you, the investor, lose and Wall Street wins. And why are they doing that? Because they're getting paid. That is my claim. I've given it evidence to the SEC. A lot of it's outlined in this book, but let's not talk about fraud. Let's talk about how to profit from these products. So without further ado, let me showcase the brand new dashboard, which is the most valuable dashboard I have released thus far. So once again, this is looking at all ProShares products on a daily basis. The default range is year to date. So 2026 through August 7th is the last date of the data. So it was last Friday. This will refresh overnight. It's 7:49 where I'm at now at 3 a.m. It will refresh and we will see what today's data brought. So when we're looking at this, this dashboard is built to have our starting date be the 1st of 2025 through the present, and it will roll forward each and every day. So I'm going to skip through this dashboard and go back and forth just to have it make a little more sense here. So rather than looking at these tables right at this moment, we're going to skip right down to the main event, which is this table down here, which lists all 102 products. You can see me scroll through them, as well as filtering mechanisms. So here we can see how many shares were issued or redeemed in each product. Shares that were issued are in green. So from Thursday, the Thursday share count for this product, the new Ultra Sky Hynix product was 4,440,000. At the close on Friday, there were 4,920,000, which is an issuance of 480,000. That represents 10% of all shares that were issued to investors were issued between Thursday and Friday night. That's a very meaningful move. If you followed my work, I just want to give you a framework. You're probably already familiar with this, but essentially green means to sell short. If Wall Street is issuing this dog doo-doo to investors, it's because they think that on average they're selling for 100 and you're going to later redeem for 90, 80, 70, 60, 50, 40, 30, 20, etc. Otherwise, they would not be issuing these. If we take a step back and think of how these products are structured, these are 2x or 3x products, which means that if they're selling for 100, they're actually exposing themselves to $200 worth of liability because they owe you a return for every dollar that product goes up. Once again, they are very confident when they issue that on average, in aggregate, they are going to be having you redeem or force your redemptions if it's through a third party, like I mentioned, at a loss. So these will not be a benefit to investors on average. So we can filter each of these values by percentage if we want. So UCYB had 16% redemptions, meaning they want to cut their exposure. Maybe they think this product is going up. QID also heavy redemptions. And then some of these that are in the low percentages might just be noise. Obviously a larger percentage means a more meaningful move. You can make that determination yourself. But we can filter these and sort these by column depending on our preference. We can also choose the drop down to look at the various leverage factors, whether it be 1.5x, 2x, 3x, negative 0.5x, which is SVXY, negative 2x, negative 3x. Along with the dashboard down here, so we're looking at SQQQ. They had some meaningful redemptions on Friday, which means we should anticipate that TQQ had meaningful redemptions. So we would anticipate that there's some demand on this. But when we look at the percentage, it's only negative 0.12%, meaning that only a fraction of a percentage point of these products were actually redeemed. This product, TQQQ, is probably noise for that day. But if we look over here and we scroll to the right, we actually have an indication. If you're following along in what I call the day late dollar return model, it tells us what to do if we're following along and how much money we would have made this year had we followed this. So I'm going to scroll it back up to the top here, but if we're following this redemption pattern for this criteria, this scalability, we would be buying to cover on Monday morning 6 shares, buying to cover 6 shares. Had we followed this whole process along from the beginning of the year to date for this one product, we would have made $4,468. Now let me scroll up real quick, and I'm sorry we're going on tangents here, but I hope you can follow me. You're saying, well, how do we know how many shares? Well, if you followed my work, you know that I do a default scale of for every 100,000 shares that are issued or redeemed, I sell short, I sell, I buy, or I buy to cover 1 share. So the scale is 1 to 100,000. I allow you to choose your scalability here. And to give you kind of a portfolio value that I would value this at is 1 to 100,000 is probably good for a $100,000 or $200,000 total portfolio that you're putting in the strategy. 1 to 10,000 is 1 to 2 million, and 1 to a million obviously is a tenth of the 100,000 to 200,000 range, a $10,000, $20,000 portfolio ish. If you follow along, what you choose here does nothing to the percentages. It does nothing to the number of shares. All it does is change what the recommended trade size would be based on your portfolio. And then this number would obviously be reflected with that change as well. So pretty cool stuff if you want to follow along and profit. We're going to look at the TQQQ. So this button here does a pop out and it gives us a history which will take a minute to load, but it will give us a history that we can dive in deeper into the product for the entire time period. So for this default, we chose year to date. We can see the selected range dollar flow history. So this is money coming in and out of the fund, creations and redemptions. We can see that over this year, we had net redemptions of 56.85 million shares were redeemed. The dollar flow that represents $3 billion. Once again, our realized profit for this entire year would have been $5.81 thousand based on 1 for 100,000. Our realized gain we have, and we would currently have a position in our account, and that position would be have a negative balance in our account. Our non-closed position would be negative $1,350. We would have had 145 trades. It trades every day. Our average capital invested would have been 31K, and our gross exposure would have been 42K over that time period. So basically, if we would have followed the day late, dollar richer model over the entire year, how much would we have had at risk? What would our return would have been, et cetera? So a 4,000 return on a $40,000 average gross exposure is about a 10% return year to date by just following along. Absolutely mindless. What Wall Street does, we do. We just do it a day late. So once again, I'm showcasing a few things here. The ability to make money off of my work and off of the exploitation of other investors. This showcases that it is fraud, which is a big purpose in my mission, and why this website exists. And that's the reasoning behind it, is that I have deconstructed the fraud and am now showing everyone how to profit from it. If enough people do that, these products collapse, investors are protected. For those that are just looking to profit off it, perhaps it's a limited time opportunity, because once again, if everyone does what I do, there's no profitability in these products and they cease to exist. We can see the flow history. So this is on a daily basis, the shares, right? We can see every single day what happened, what we should have done, how much money, the flows, the dollars. It's a full audit trail. No cherry picking information, no Monday morning quarterbacking. The model is we follow along with what the issuers do, and here are the receipts. Here are the day late dollar richer trades. If you want to follow those, your realized position or loss on each of them from the beginning of the year to now, and then also information on where that information is pulled from. This is accurate information. It's as accurate as what the issuers provide the SEC. So you're getting a representation of data that they are required to file, number of shares outstanding, the close price, the number of assets, etc. All we are is taking the public information, we're refining it. So I hope that makes sense. So let's talk about the day late dollar richer strategy for a second. This is the assumption that we are looking at all products. So all 102 products, and we're trading them every day. What amount of money would we have made, and what was the aggregate amount of money we would have had at risk? So from year to date, so the dates are here, 1/1/2026 through 8/7/2026. It's 146 total days. We would have made roughly 13K in total profit. 12.21K of that would have been realized, meaning the position's closed because we're buying and selling each day. And we'd have an open P&L, what would currently be in our portfolio, of $693. Our average daily capital invested would have been roughly 84K. So let's just do this real quick. Calculator. Let's throw up the calculator here. It's not showing up on my screen, so I'm just going to do it here and tell you. So if we have 12.9K divided by 83.76K, we're looking at a 15% return year to date, beating the market, because we're only 7 months and a week into the year. We have a 15% return by doing nothing but following along with what the issuers do on a daily basis. Throughout every year and the history of time, this is a profitable strategy in almost every year, all years but one. And the 1 year it was slightly not profitable was the market was drastically down. So this is a very profitable strategy. And over time, this outperforms the strategy by multiples. The information's there. The receipts are there. This has previously been disseminated to the SEC. It's in my book, Structured Fraud, and it will work going forward, because if it doesn't work, that means the issuers and their Wall Street counterparties, it means Wall Street is losing money, and that does not happen, especially when they can take money from your pocket and put it in theirs. Once again, don't want to stand on my soapbox on why this is fraud, but when you ask yourself why this works, it's because it's fraud. Is there another reason? No, there's not. Wall Street created a casino game in which you don't get to choose to play, and the odds are not in your favor. But because we can sell short products, we can follow along and profit. So all these returns are before any fees or slippage paid. So this is just a mathematical return, but it demonstrates the point. So here's all this general information up here. Net dollar flow is $459 million into these products. The gross dollar issuance was around 50. The gross dollar redemptions was around 50. The gross actual shares issued is 1 billion. Gross actual shares redeemed is 1.03 billion. So a little bit of issuance versus those that were redeemed. But we had a product like TQQQ that went straight up and had huge redemptions. This latest official flow leaders, this is the same information that's down here, but it's the top 5. It's the top 5 products with the greatest percentage of issuance and the top 5 products with the greatest percentage of redemptions. You can use this as a big indicator of where the massive flows are happening. The latest dollar issuance, the leaders, the latest dollar redemptions, the leaders. So I hope it makes sense that some products are much smaller than others, meaning they could have high percentages, but they're not high dollar amounts. This is looking at dollar amounts, leaders. This is looking at percentages. Going to give you a little hint. When these align, it's more meaningful than when they don't. So if you have a big product having a big redemption, it matters more than if you have a small product having a big redemption. That should be intuitive to everybody, right? More money flowing somewhere is more meaningful than less money flowing somewhere. Okay, I hope that was a good background. So we're going to skip this for now. We're not going to look at this. This section is really meaningful to showcase, 1, that I'm right with my fraud claim, and 2, to give a general sense that, oh my gosh, this dashboard has some giant value and I'm going to be a subscriber and follow along. So this selected range, leaders, and remember, our range here is year to date. You can change different data, but we chose year to date. So we're looking at all of 2026. What are the top products that had the greatest number of shares issued? And what products are the ones that had the greatest number of redemptions? Once again, I don't want to stand on my soapbox of fraud, but we're going to say something logically. If I'm right, green means it's going down. Red means it's going up. Wall Street is cutting their exposure to these products because it's going against them. For every dollar it goes up, they owe $1 out of their pocket. These are swaps. These don't hold anything. They are a liability, just like a note would be, a bond would be, an IOU written on a napkin. If this goes $1 higher, I'll give you $1. That's the equivalent. That dollar has to come from somewhere. So if I'm right, we should be able to look at all of these products. SCO should be down on the year. Cold should be down on the year. SQQQ should be down on the year. BitU should be down on the year. ETHT should be down on the year. Likewise, these should be up. Let's check each of these. There are 10 of them here. We can check them. We can look at the chart year to date. So I have that preloaded here. So let's look. So we have SEO and cold. So we're going to look at those two. So SEO, we are expecting it to be down, right? Huge number of share entrants. Oh my gosh. It went from 80-ish at the beginning of the year, and now it's at 29. Okay, Rob is right. 1 for 1. Let's look at cold. Cold should be down on the year. Okay, beginning of the year, it was around 50. Now it's at 31.22. Rob's right. 2 for 2. Let's look at SQQQ. And just to go back here and show you, SQQQ, BitU, and Ether. SQQQ started the year around 70, did go up a little bit. Now it's down at 37. Rob's right. 3 for 3. BitU, this should also be down. Oh my gosh, here it is around $25, and now it's at $9.64. Rob, 4 for 4. Man, this guy's getting better looking by the moment. Now let's look at the Ether. Once again, should be down. Oh my gosh, at the beginning of the year, it was around 44, and now it's at 10. 5 for 5. This guy is on fire. Let's get him a baseball contract. Now we're going to go to the ones that we would expect to be up on the year. TQQQ, SSO, UCO, UPRO, URTY. Let's see if we can go 10 for 10. Huge share redemptions. Why are they redeeming? Because they're limiting their exposure. They want to kick the card counters off the table because they want to make sure that only dumb people are betting on these products. Goes along with my paper, the evidence I gave the SEC years ago, which was published now years ago, which we're now looking at this year. And the book was published in 2024 and the papers were published in 2025. So the efficacy of my work is that it's predictive for the future. So you could ignore everything we talked about here, watch it going forward. It's August 10th right now. Look at August 11th, 12th, 13th, on for forever. If I'm right, this will hold consistently true. Like card counting, it's not right every single day, but it's right more days than it's wrong. And the money you make is more than the money you lose on the down days. So I want everyone to think in their mind, Wall Street created a casino game where they know the outcomes before it's sold. And they're also dictating who's playing at the table. You're playing at the table and you don't know it. There's evidence that's been given to the SEC. Holders of 401k plans at Lockheed Martin are exposed to hundreds of millions of dollars of this product. That's public information. I'm sharing that with you now. Those holders didn't dictate necessarily that they wanted that exposure to these products, but guess what? They're taking every dollar loss that these products have. And lo and behold, when you look at the data, man, they're buying these products at the wrong time and they're selling them at the wrong time. They're selling them before they rip higher and they're buying them at tops. So why is this valuable? Why does it beat the market? Why are you going to make money from this if you want to? It's because it's fraud. So as I always say, there are two ways to beat the market: fraud, FRAUD, and fraud, FRAWD. I'm the latter. So I hope you enjoy this. So let's look at these five and see if we can see if Rob can go 10 for 10. So TQQ, remember, all of these should be up. TQQ, SSO, UCO on the year. TQQ, oh my gosh, beginning of the year, 52. Now it's 74. Man, Rob 6 for 6. Let's look at SSO here. SSO, beginning of the year, 60. Now it's at 71. My gosh, this guy is 7 for 7. He's the greatest player alive. Now we look at UCO. UCO, 18, now 37. My goodness, 8 for 8. UPRO. UPRO was at 120. Now it's at 155. Oh my gosh, this is on fire. How is this happening? Beginning of the year for the Russell 2000 URTY, which is the last one on this sheet. Oh my gosh, it started the year around 47. Now it's at 86. 10 for 10. No one's better. No one can do better. It's impossible to do better than 10 for 10. He's batting 1,000. This guy makes everyone else look like a joke. Why? It's because it's fraud. So this is a very valuable dashboard because it's money. It's money that you just press the buttons. And if you do it wisely, as I've outlined here, you will make money over time. Why? Because it's fraud. Can anyone question that? No. But you can see, and love to have you prove me wrong. Once again, to prove it's fraud, you don't need to put any money at risk. I would recommend, you know what? There's a lot of people out there saying a lot of bold things. Not many of them are legally represented whistleblowers who've been saying the same thing for 7 years and have the track record I do. But let's assume I'm a charlatan, right? Let's assume that either I found fraud or I am a fraud. What can you do? Well, you can look at this dashboard and you can paper trade it every day, or you could trade a small amount every day and see what happens every day. As I said, my work is consistent. It worked in 2019, when I became a whistleblower and gave this to the SEC. It worked in 2020, 2021, 22, 3, 4, 5, and now, and it will work in 27, 28 until these products, one, either change how they're composed, which I will scream at the top of my lungs when that happens to indicate the fraud no longer exists, or these products collapse. Until then, this is going to be profitable because these products are constructed based on mathematics and the incentive structure that they have to sell product for a higher price than it's later redeemed, or Wall Street loses money, and Wall Street doesn't lose money. They have all power, all knowledge. They have the academic system. They have the journalist system. They have lobbyists. They have Congress in their pocket, and now they have the president of the United States. This is fraud. This is why it works. Don't risk your money on it. I mean, do whatever you want, but you can prove that I'm right by paper trading this or just following it. The data is there. We'll watch it rolling forward. So I hope you enjoyed this video. This is of huge value. For the next 7 days, this has a 3-day free trial. It's $50 a month. I've broken that up into weeks, $11.99 a week. It is valuable. It is very valuable. This dashboard's worth far more than that. And I'm going to be adding a direction dashboard that mirrors this, but for the direction products at a later date. If you buy the subscription to this product, you will get the direction product for no extra cost. I have had 5 signups in the past, 12 hours since I actually released this. There are 5 more available at the low discounted rate of $50. It goes up from there when those 5 are purchased, and the 3-day free trial lasts for 1 week, and then I'm removing it. And those are hard dates. So if you're interested, sign up for the free trial. You'll lock in the low price. At the end of the 3 days, you'll be charged. If you don't want to be charged and just want to check it out for 3 days, it's my gift to you. Share it with people. Share it with, I want eyeballs on my work. No shade for me. Sunlight is all I want. So you would be doing me a great service if you share my work with somebody that can help promote it. I want eyeballs on this because in the end, that's really what my financial motivation is to be a whistleblower and receive the award, to prove fraud and to really give validity for my hard work and effort. So I hope you enjoy this. I hope you really thought this was fun. That was quite fun. And once again, you can watch this going forward. This will update over time based on the criteria. So if there's huge issuance of something else that bumps ETHT out, you'll open this one day and it won't be these 5 anymore. It'll be new ones. Same with the redemptions. So very dynamic dashboard, a lot you can do with it, a lot you can follow along. And the most meaningful thing is you can see the percentage of issuance or redemptions, because the larger the percentage, the more meaningful the information. So thank you for your time. I hope you enjoy my work. Give me a shout out. Follow me on Twitter. Follow the YouTube channel. Thanks.